everyone, my name is Fernando David, and in this video we're going to touch on or talk about investing in residential real estate. Before I get into that though, I want to bring this up, and I believe that you should invest in what I call your highest and best. What do I mean by that? I mean, find an area that you have some knowledge in, or that you have a special skill for, and invest in that. For example, the stock market, Bitcoin, investing in businesses, investing in people, right? Find a vehicle that you're comfortable with, that you have some knowledge on, and invest in that. But in this video, we're going to specifically talk about residential real estate. If you want to invest in residential real estate, the very first thing you should do is that you should identify what type of investor you want to be. In my opinion, there's really three types of investors. You have the DIY investor, the do-it-yourself investor, which I identify myself as that type of investor. And that investor will do it all, right? They will search for the properties, meaning look for the deals. They will negotiate the deal. Then once they have the deal, they'll either, if it requires rehabbing, they'll do the rehab themselves, or create a team to do the rehabs themselves. And they manage the property themselves, right? They pretty much do it all. The plus with that is that you have a tendency to really learn quickly. In addition to that, if you buy right, and once you have a grasp of the market, your ROI tends to be a little bit higher. So that's one investor. The second type of investor, which a lot of people get into, especially newbies in the game, is what I refer to as turnkey investors. The key to that is to find someone or a company that already has the knowledge, they've done it before, or like I said, find a company like my company, and team up with that company and buy real estate through them. The plus to that is that if you do your due diligence, and I highly suggest, because it's one of the cons, I highly recommend that you vet the team or the company that you hire, or if it's an individual, that you vet that person, right? Because you can win big, but you can lose big as well if you don't do that. But the pro to hiring a turnkey company is the following: they're going to do all the work for you. They'll find the property, they'll make sure the property cash flows, they'll rehab it, and they'll manage it. So what happens there is that you, in essence, will have truly passive income from that residential real estate investment, right? Whereas the DIY guy or the DIY person is actually working, right? The revenue they're going to gain from that real estate investment is not passive. And believe me when I tell you, being a landlord or self-managed real estate investor that manages their own properties, it's not easy work. It is the money that you're going to invest in there is definitely not going to be passive. So keep that in mind. The third investor are people that just want to get into the game, but don't want really don't want to own actual real estate. So they'll go ahead and buy into what I refer to are REITs, or which are in essence like a portfolio of real estate. The other example will be investing in individuals such as flippers. And even my company, we accept investors, right? People that want to give us money and they want a rate of return on that money, but they don't really want to own property, or they don't want to be committed to owning a specific property. So they'll get proceeds of the portfolio that we have. So those are your three types of investors. Now, let's talk about, and let me just go in here real quick. We're going to talk about some of the benefits now, right? As a real estate investor, there are four ways to make, or four key reasons why you should invest in real estate. Number one is probably my favorite, and one that everyone should be looking for, is cash flow, right? Cash flow basically is the money that's left over after all the expenses are paid. That is, for me, the bread and butter of real estate investment, right? If you have a substantial portfolio of residential properties or rental properties, you can live really well. In fact, in most cases, if you start young enough, you can retire early, or you can make a decent living just living off your cash flow. So cash flow is number one. Number two is going to be your tax breaks or tax benefit that you get as a real estate investor. Unlike other businesses, right? Unlike your W-2 job that you have, as a real estate investor, you're going to have the ability to write off or get substantial tax breaks. So you keep more of the money you earn. I'll give you an example. I know plenty of attorneys and doctors that are extremely high earners, but my real estate investors and people like myself make more money than they do because we get to keep more of our money. So tax breaks and tax benefits are a huge advantage as a real estate investor. Probably the biggest is mainly because you can depreciate the property, but that's a subject for another matter. But just know you get substantial tax breaks as a result of your real estate investing when you own the property, right? Number three is going to be appreciation. Through time, property appreciates, or the history tells us and the market tells us that with time, you will make money through appreciation. The longer you hold on to the property, the better off you're going to be. That's just like in any investment. You should be looking at real estate, the stock market, for two examples, as long-term investments. Can you make a quick buck? Yes, you could. Especially if you're a flipper, wholesaler, you can make a good amount of cash. But this video is about investing, especially investing in the long term. Appreciation is going to be key. The last one that I like to discuss, that for me it's a huge benefit, as a real estate investor, you're going to have the ability to build wealth. In addition to that, you have what is called equity in a property. So we highly recommend, and we preach to a lot of our clients, to leverage the bank's money. If you have good credit, I believe it's better for you to get a mortgage. Especially today, you can get a mortgage for 2.75, under 3%. You can get a mortgage on a residential property, even as an investor. Now, investors usually pay a little bit more for mortgage rates, but I've seen them as low. But even if you get a mortgage rate of 4% as an investor, that's still very, very good, because on average, if you've been following my videos, you know that on average, or the bare minimum that I get per investment is 10% return on my money. So even if I'm paying 4%, 4% interest rate, I'm still ahead of the game. I'm earning 6%, right? So building wealth and equity is extremely valuable, or one of the very good points as it relates to investing in real estate. The other thing is this: if you buy right and you have the right tenants in place, then your tenant or the rents that they're paying are going to pay down that mortgage, which is going to give you more equity on a property. So I'm going to give you this example as to why I prefer real estate versus something like a 401k or an IRA. So here's the difference, right? If you have a 401k or you have an IRA, you're putting money out of your pocket into that investment, into that vehicle, right? That vehicle, on average, if you look at the history of the stock market or 401ks, you're probably looking somewhere between 3% and 6%, especially if you understand the amount of fees that you pay into your 401k. But I don't want to get into the weeds there, but just know that money's coming out of your pocket to put into that 401k. In a residential real estate investment, again, if you buy right, you get the right tenants in place, money should not be coming out of your pocket. In fact, you should be, we talked about cash flow, you should be making money on a monthly basis on that property. In addition to that, your tenant is paying that mortgage, paying that debt down. So as time goes on, your debt's being paid down, your property's increasing in value because of appreciation. And I'm not even going to touch upon forced appreciation, but understand that you can force equity into a property by buying a distressed property and fixing it up. But going back into building equity and wealth, as time goes on, your tenant pays down your mortgage, right? Increases your equity, and you have appreciation. So if you watched my last video in which I discussed a property, a triplex that I bought, you get to see the difference in profit, the effects of time, the effect that time has on a residential property. If you have any questions, please do me a favor and list them below, because I hope that this was useful. I was fairly quick, fairly general. But again, if you like it, please subscribe, share, hit the notification button, and follow us on Instagram.